All right, time now to shed a little light on the dark side of the markets. Last week, we took a closer look at the comeback commercial mortgage-backed securities are making this year. And today we focus on the residential mortgage-backed securities market. Our guest is Ajay Rajadhyaksha. He's a managing director and head of U.S. fixed income and securitized products research at Barclays Capital. And he joins us now live from his firm in New York. Ajay, we had your colleague on last week talking about CMBS.
Right.
And one of the things we pointed out was that CMBS, the commercial market, is very different than the residential mortgage-backed securities market. So why don't you set the stage a little bit for us? What is happening in this market right now? And separate out sort of the agency MBS market from what is known in the industry as the whole loan MBS market.
Sure. You almost have to think about it in two ways. One is what is happening for the borrower, what is called the primary mortgage market, and the second is what is happening for the investor, what you and I call the secondary mortgage market. In the secondary mortgage market in general, for the past year and a half, 2 years, most investors have done well, and they've done much better, ironically enough, in non-agency mortgages. The mortgages that got beaten up the most in 2008 and early 2009, they have done very, very well in price terms over the last year and a half, 2 years. Agency mortgages have not done too badly either. Remember last year, everyone was concerned when the Fed stopped buying agency mortgages, how the asset class would survive. But it survived just fine. There's a lot of buyers on the sidelines who stepped in when the Fed went away. But it's the primary side that is in many ways the bigger challenge. The ability of mortgage borrowers to get new loans or to refinance is lower now and has been low for a while now, and it's at lows that we haven't seen for the last 10 to 15 years. So even as some other things are easing up, residential mortgage credit remains very, very tight.
Now, Ajay, one of the things that we were talking about last week was about the first commercial mortgage-backed securitization that we've seen probably since 2007, potentially coming to market this year. What's happening on the issuance side? I was taking a look at the Fannie Mae, Freddie Mac, Ginnie Mae issuance of mortgage-backed securities from the government. That has fallen quite dramatically, of course, since its height back in 2007 or mid-2000s. What's going on in this whole loan residential mortgage-backed securities market? If Wall Street is not actually securitizing these things, where are the loans sitting?
Well, the ones that are being made, and there are very few being made, the ones that are being made are extremely high-quality loans, and they are sitting on bank balance sheets. Like you said, Wall Street is not securitizing them, but these are loans of a quality that Wall Street wouldn't mind securitizing. It's just that these very high-quality loans are sitting on bank balance sheets, and anything below that credit quality, the loans are just not being made.
And Ajay, I got to ask you, another story that we have been talking about is this ever-widening probe by the New York Attorney General into these securitizations. Is that having an impact on this market and the desire for underwriters to step back and say, no, we'll just own the loans and not use the securitization mechanics any longer?
Oh, most definitely. So it's having an impact in two ways. On the plus side, what is happening is that banks are making sure that they are absolutely confident in their ability to foreclose before they actually tip a borrower into the foreclosure bucket, if you will. And on the other side, on the issuance side, like you said, mortgage underwriters, mortgage banks are being very, very, very cautious when they make new loans, because the perception is, well, we might not actually get to securitize this. We might be better off owning them.
All right, Ajay, unfortunately, we have to leave it there, but certainly you did help us connect the dots there, sort of leading all the way from the mortgage-backed securities market to the actual borrower and the impact of securitizations falling as they have. All right, we're talking to Ajay Rajadhyaksha of Barclays Capital. He was our guest today.